Ladies and gentlemen, this should be it. We should be live right now. If all is correct. Oh, wait, no. No. Okay, there we go. We're not about to look into this presentation, all right? Okay, today, essentially, we're going to be doing a full review of PayPal stock from the time... all right, I'll just go to the presentation, all right? You guys already saw it. Essentially, from the time that we've last seen these prices at $58.56 as of today. Last time we saw that was Q2 of 2017. Can you guys believe that? Back in July, once we got the Q2 2017 numbers, the stock went running. That's what you guys can see over here. But for the most part, we haven't seen this, or afterwards, the stock has absolutely ran all the way up into points that are blowing through the top of my screen and then down all the way to today. We're going to see what has happened since then, all right? Hope you guys are all doing well. This video is something that I'm really excited about. All the numbers were help with a nice little tool that I've been using called Koyfin, and I'll be talking about them more later. But for the most part, let's keep it all towards PayPal. Sorry. Okay, just reading some chat messages. Hope you're all well. Okay, let's do it. We're gonna have about 30 or so minutes, and I might take up all that time just getting through this presentation. It's quite number hefty. I hope you guys like it. Welcome to PayPal. Brought to you by Koyfin. This is where I got all the numbers. This is where the chart is from. Everything along the lines of what you're seeing. Gonna be quite exciting. Okay, first, let's cover PayPal's highlights. Okay, so as you can see, these are the key financials. Revenue back in Q2 of 2017, $11.75 billion. Okay, to today, the current quarter, Q2 2023. Oh, by the way, these are not quarterly numbers. These are like you're seeing the last trailing 12 months. Okay, last 12 months, where you're also seeing $28.5 billion. Revenue growth has slowed down from 17% to 8%. Gross profits from $5.4 billion to $11.8 billion. Gross profit margins a little bit decreased, nearly 5%. Okay, and then we're also seeing things like EBITDA at $2.2 billion, now up to $5.5 billion. EBITDA margin actually slightly increasing. Net income's 1.5 to 4 billion. Net income margin increasing. Diluted EPS or earnings per share 1.25, 3.6. Year-over-year growth exploding. And then price to earnings ratio. How cheap can we actually get this stock? Well, back in the day, it was actually 47.4 times. Today, it's 16 times. Okay? That's it. Now, how are these actually affecting the numbers? Okay, so the numbers since 2017, we've seen a 142.8% increase, 143% increase, 170% increase on net income. EPS has grown by 189.5%. And the price to earnings ratio means that this stock is also 65.6% cheaper. That's PayPal right now, baby. What do you guys think? I mean, come on. Imagine if PayPal had a dividend on it that entire time. Lol. Okay, I'll behave this stream. John, it does have a dividend. It's called buying back shares. It's just unofficial. We're getting this stock cheaper as time goes on. They're using their money to give money back to their shareholders for sure. And we can see this in a couple ways. Capital structure, for example. Whenever we look at market cap, the market cap has actually gone down. Cash has gone from $4 billion to $9.9 billion. But we've also started taking on some debt, $11 billion of debt. Okay, so how do you factor in the cash and the debts? Well, we add it to the market cap, right? We add the debt onto the market cap, and then we minus out the cash. That's what an enterprise value is. And if we actually look at the enterprise value from Q2 of 2017 to current times, last 12 months on both of them, it's roughly the exact same. We actually look at it deeper. Taking a look at it, market cap's decreased 9.2%. Cash has gone up 122%. We've taken on some debt but still the stock remains 1.6% cheaper just on an enterprise value, not even just talking about earnings or price to earnings ratios or anything along these lines. Okay? This is why I'm loving PayPal right here. Is the fact that it's not just about it being cheaper from an enterprise value or anything along these lines. It also has to do with the multiples. Okay. If things were just stagnant over time, that would be absolutely fine over the last 6 years. It still might not be investable. The exciting part is how cheap that this stock is getting compared to not only the market, but also itself. So whenever we're talking about these multiples, the lower, the better. Okay. So enterprise value to sales meaning revenue, what they bring on. Okay. Price to sales, this is market cap to revenue. Enterprise value to EBITDA. Okay. Or even price to earnings, like this would be market cap to actual profits, right? Sorry, I got a cat that's trying to take down my whole stream right now. No more biting on cords. All right, let's continue. So what have we seen? Well, we've seen a 59.6% decrease, 56% decrease, essentially all within the 50, 60 ranges on multiples actually decreasing. That makes this stock much, much cheaper whenever we're looking at the multiples. Guys, come on. There's nothing more exciting than this, no matter which way you want to spin it. PayPal is getting a cheaper stock over the last 6 years, while also increasing on all of its monies, but all of its earnings, but also its returns and margins here. So look at this. We looked at it from return on assets, return on equity, return on total capital, return on common equity. Okay, EBITDA margins. Taking out the depreciation, taking out the amortization, taking out the interest payments. Actually, I don't think we had a number for that. But gross profit margins, sales general and administrative. Why am I thinking that's something else? SG&A, yeah? Anyway, net income margin, normalized net income margin. Every way that we want to spin it, essentially, we took all these numbers, we took a look at them. 19.4% increases on return of assets. 97.4% increase on return of equity. This is a slam dunk, okay? The only thing that we're seeing across the board, gross profit margin is getting worse. 10% decrease over the last 6 years. Okay? What's the problem? The problem is transaction margin. This is the one thing that investors, bears, whatever, can point to say, this is PayPal's problem. This is the part where this really sucks. This is where the investment does not matter. All those things, Tanner, can be perfect, okay? PayPal can be bringing on great new money, but if for every dollar that they bring on through as a payment processor like PayPal, if we're making less money, then the investment doesn't work. Now, I don't actually believe in this strategy. Okay, yes, it's an 18.5% decrease overall on the transaction margins. That's how much we make less per $100 per $1,000 that we bring on, that we process through the system. Okay, whenever you factor in how much bigger the business is, how much more in gross profits, how much in EBITDA, how much in net income, how much cheaper it is from a price to earnings perspective. Whenever we look at that through enterprise value being the exact same, even though all those other things have increased, all the multiples are much, much cheaper. If we look at all the returns and margins for the business, most of them also improving over time. This is unbelievable. Okay. All for an 18.5% decrease in the per dollar amounts of money that we're bringing on. And Throwable just said in the chat, I think volume growth can counter that. That too. That's not to also mention how much more they're actually processing since this time. So let's see what's happening with some other things that are happening in the business. Okay. Diluted weighted average shares outstanding. Okay. over time since 2017 have been going down over and over and over and over. This is due to buybacks with like what John Blake said, if only they had a dividend. Well, they do have a dividend, but the dividend doesn't get paid out to shareholders. It gets paid out back into the business. And the buyback yield, how much of that outstanding shares they're buying back per year or over the last 12 months is 7.84%. That's only expected to go up over time as the price of the stock keeps falling. People said in my last video, okay, well, stock-based compensation on PayPal has been quite disgusting. So how do we factor this in? And yes, it is high comparatively to not the likes of like a Sofi or like a Palantir or anything like that. It's extremely low compared to those. But compared to the, some other very established brands that are that old, that are that mature, it is quite high. But even you can see on a chart basis, it still is headed down in most recent history. So they're trying to repair that as well. Analysts, even whenever we start looking up, like my gentleman right here, okay, they're pointing up to what the analysts have to say. Let's take a look. For the full fiscal year 2023, year over year revenue is supposed to go up by 8.1% in 2023, and EPS is supposed to increase by nearly 20%. Fiscal year 2024, year over year sales continues to grow, but not only that, it's increasing faster than it did the year before, 8.1% to 8.7%. The year after, 9.1%. This is accelerating growth, is what is expected. Now, the same can't be said on EPS, okay, 14%, then down to 11, but it's still much ahead of where the actual sales are set, where the actual revenue growth is being seen. So that means that there's still expecting that whether it's buybacks that are creating the difference there, whether it's additional operating expenses that can come down that will also make the business operate more efficiently and bring on new profits, there still is a lot of growth to be seen. Whenever you bring on new sales of 8%, but you're expecting 20% increase in EPS, the business is getting a heck of a lot more efficient, okay? And that is on top of all of this, on top of all of this, on top of all of this, on top of all of this. Okay. All of that in 6 years. What's going to happen in the next 6? Because right now the investment is saying that it is going absolutely nowhere. Shorts are starting to increase. People are betting against the company. And this does not look like one of those feats. So I reiterate, PayPal, 58.56 is a willing bet that I'm willing to take because of all those numbers that I've recently shown. And I don't necessarily, whenever I'm actually talking about this company, do I think that it's going to get here. I'm not even aiming for that. What I am aiming for is more of a price target around $100, $110. And that would be a safe bet for me, a very healthy bet, and one that I think will pop in the short term. I don't even think we'll have to wait that long to see that. We might need to wait very long for it to get back up into some of the ranges that we've seen previously, anywhere above this line, where margins start to really expand. Then yeah, absolutely, things are going to get, people can start having a discussion of whether PayPal is ever going to get back there. But I don't even think we need to get there. I think this is just a reversion back to the mean. That is my presentation on PayPal. If you guys have any questions, love to chat. Essentially, this was all brought on because I discovered a new tool called Koyfin that allowed me to generate all of that data instantaneously. They had all of their financials going back all the way to 2013. And I was able to put that spreadsheet together instantaneously. And I wanted to show you guys a picture of what I had necessarily been seeing. And a lot of people have actually been seeing. The person that gave me that original idea for that video was Stephen Fiorillo. He had pointed out, that price and how much the business has changed since then. But Koyfin just allows it to be visualized so easy. John said, "Are they doing that for free?" No, Koyfin is not free. In fact, it's a decent price. It's for a very like you need to be quite a real investor. I think what it is, it's like the poor man's Bloomberg terminal. Like it has everything. You can source every little bit of knowledge, but you're going to pay a hefty price. It's about 900 a year, I think, is what the bill is for the Pro. I think their Plus plan, which comes with everything aside from just like model portfolios and what do you call it? Like mutual fund information and ETFs and all those things is, I think, half of that cost. I think it's about 400 and so. And you can also get 20% off. But aside from that, what's it called? For the most part, most people will need like the Plus, and I don't even think a lot of people do need that. But if you're me and you're making videos every single day and you're really caring about your content and your portfolio, then it's a must need. You know, at least that's what I've seen so far. But yeah, let me bring this screen back up, and we can. I'll just keep that up for a sec, just so people can see. Because I don't think that all of this predicates on just the idea that transaction margins are falling. I don't think that this is as big of an issue as what people are saying. And one of the things that I also think is quite interesting, as you know, people will say that payment processing is getting quite easy, and it's just going to be a fall to the bottom of who can offer the cheaper rate. I do think with AI and with all these things that scamming is going to become more commonplace, or at least more efficient scams, and that the real problem will be identifying a fraudulent payment, especially whenever it comes to things like FedNow, real-time payments, these sorts of things, that the risk management will be really, really important. And I think that a lot of these companies will start reverting to the big players that have that processing volume and the smart algorithms. It's very, very hard to tell what makes the difference between a Stripe, an Adyen, or a PayPal. And it's hard to tell because it's just their machine learning algorithms. It's how can they catch certain things that might be fraudulent where others can't, or also false, like false striking someone as a fraudulent payment. For example, 80% of people, whenever tapping their card, go through. 20% get blocked, even whenever they are making a real legitimate purchase. And I do think that as new products come out and things like stable coins and cross-border transactions and all these things get more popular, that there will be a reversion back to the importance of paying these providers, the ones that have the expertise, the ones that have the technology, higher rates, so then they can deliver a higher performance that the old incumbent players just simply won't do. There was a use case for McDonald's, okay, back in the day that Adyen was talking about. And they said that there were incumbent players that could offer simple payments that people could come in and, insert their chip cards and actually take payments in the terminals, and that was fine. What they really needed Adyen for and paid a much higher price for was the idea that customer insights were also part of the transaction, and that Adyen was so much smarter and could help McDonald's understand who they're even dealing with was worth it for that extra amount, including the performance. So this is what Toby Lucky just recently spoke about on the All In podcast, was that there are so many things coming into the payment space that, even he said that they won't be able to do, that there's a reason why you're going to use some of these higher end companies, and just the love for these companies are completely out of it. I don't think they're going anywhere. When Frank debate, I've asked Frank to come on. How do stablecoin transactions help PayPal? They're cheaper. So even Dan Schulman recently just said that he believes that stablecoins will get to a position where they think that it'll be at 1/100th the cost. So one of the what do you call it, networks that I like is Solana. And one of the things that they like to tout a lot is the idea that what was it? The average payment on their platform costs 0. I think it's like 6 zeros and then 5 cents, like 0.00000005. And that it was actually what was it called? It was cheaper to run a Solana transaction than it was to run a Google search, and by like a large margin. And whenever you think about that at scale, whenever you're dealing with billions, if not trillions of transactions, you can offer benefits to people to switch to these type of payments. For example, the one way that is able for people to make transactions between that are able to make transactions between PayPal and Venmo is through the stablecoin. They don't really have interoperability other than that. And so it's very, very hard to send people money unless you have some sort of wallet address. And so if you have some older generations that might have PayPal and some younger generations that have Venmo, PayPal stablecoin might just be the way. And now currently, they don't have a lot of volume. It's not a proven thing because most people don't even know what it is yet. Whenever they start making tools that will require it, that's when I think it'll start to take off. Right now, I don't think PayPal will allow you to do cross-border with PayPal stablecoin. If I remember correctly, it's only in the US right now, but that's to be rolled out. So the exact numbers of how much they're going to take, I'm not sure just yet. Frank says, you know, you don't need PayPal. That's my point. It's very true. But I think that's sort of the thing of like, what's popular, mainstream, and safe, and what's not. Because, yeah, I mean, I had an editor and I was just paying them through either a Coinbase wallet or a Phantom wallet or something like this. And then I can just do that transaction. And a lot of the times with those vendors, that they will actually cover the cost. So it's an absolute free transaction because they're an exchange that wants me to be purchasing the crypto on their platform. And so they'll actually cover the cost of the transaction. But it's not really it's not really mainstream. Sorry, I lost my train of thought. It's not really mainstream. It's something that I think is a little bit weary, and you know, someone's mom is not doing that. They're not getting a Phantom wallet where if they forget their password, they could lose all their money. It's not going to happen. I think that there is some centralization that is needed for it to go mainstream. When central bank digital currencies come out, game over for cross-border payment providers. It could be the case. When's that going to be? And by that time, what's PayPal's role, right? Like, are you saying that with a central bank digital currency comes a wallet and a payment provider? Because I don't believe that. In fact, I think that PayPal, and they've actually spoken about this, of them being, the regular, like they want to be a big favorite whenever it comes to regulators. They want to be there to be like, hey, if there's CBDCs coming out, that why don't we be a good provider and actually the wallet that you can use amongst a bunch of them, so there's no actual monopoly there, but that you can use a bunch of them, I'm going to have to reach out to you for office setup tips at Future Investing. Yeah, I've got a janky setup right now where I've got foam all over my walls. My last setup was much better, but now this one, I got to actually hook it all up. I got to get the green LEDs back. But for now, we're just going to roll it simple. It's going to be death by 1,000 cuts. Real-time payments, FedNow, CBDCs, Visa and Solana, stablecoins, etc. I mean, uh, I feel like that's something that like people have said about PayPal forever, and it's one of those things that like, um, I don't know. I don't think people quite understand how just truly big that market is. It's growing all the time. There's always been insane amount of competition, and yet they've been able to continuously increase their profits. At the end of the day, if we're looking at it from a profit perspective, they've done quite well, right? So the 1,000 cuts have been here. The like none of these things have changed, but yet things are getting better. If you look at, for example, like China's e-commerce total percentage of payments is something along the lines of like 46% of all commerce sales is e-commerce. Pretty much everywhere else in the world is about 20%. So you have about a doubling chance from that perspective. If that becomes more regular state, you see UK is heading in that way. United States continues to increase. COVID was a little bit, or after COVID was a little bit of a downtrend, but it is heading back up, like it's reverting to the mean. And so I do think that, like I said, I don't think this is going to return back to the high 300 billion, like insane prices for this stock. Do I think it'll be $100 position and I can make quite the return? Yeah, I think I can get about an 80% return on this position. That's a healthy choice. I think this is a good discount for you to say, hey, you know what? Real-time payments is a real thing. FedNow is a real thing. Central bank digital currencies, a stretch of a real thing, but yeah. And that all the increases in the market will also offset that. You could say that because something's better than another product that people are going to go that way, but I think that undermines how much customer service, brand loyalty, and these sorts of things are really important to people. Transactions at PayPal continue to increase for the average person. The average amount of transactions continues to increase for the PayPal ecosystem. And that's only going to increase as they give out more and more, sort of banking products. And so capital is a big thing. Buy now, pay later is probably the greatest opportunity for that. You're taking payment processors and turning them into, capital providers, credit companies, and they don't necessarily need to be that way. And Matt Money's talking about going private, but like, I think over this certain amount of years, they're going to take themselves private. They're buying back shares at an 8% clip. Their buyback yield right now, 7.84%. Outstanding shares continue to fall off a cliff. The cheaper it gets, the faster that accelerates. So how many more years does it stay down at these prices with year-over-year expectations for earnings accelerating, EPS accelerating, only increases their buyback ability for new shares if it stays down this low? That can only stay on for so long. So if this takes 8 years, what do we like? Do we have 10% outstanding shares left? Has Alex Chris reached out to you yet, Tanner? No, I've reached out to him, however. But these guys don't want to talk. He's busy as all heck. Like, I think this is very, very interesting. And of course, if you ever see a stock do this, head down on an absolute falling off a cliff like this, there are problems like Frank is outlining, right? I'm not stating that. I'm just saying the juice is worth the squeeze for what is left here. If there is a cigar butt of a company, this is a juicy cigar. This is someone. A bunch of people are throwing this out without realizing there's half a cigar left. There's a hell load of a market to continuously increasing while they're buying back shares. He is reaching out to customer, vendors, and staff, so you never know. Look at AutoZone. They've bought back 85% of their float. Doesn't mean that they're private. They just have 1/6 of the shares, and price has gone through the roof. Yeah, absolutely. But like, would you say that that's been a bad ride so far? Because I'm sure that over the last, I don't know how long that's been, right? That's been over the last like 15 years, hasn't it? I don't follow that stock very closely, but I saw a slide very recently showing what their EPS has been over time, and it's just like absolutely gone through the roof because shares have just been they've just been taking shares off the table for years and years and years. Has that been a bad investment for shareholders? I don't know. Like that's an answer I actually don't know. Someone should tell me. But I don't think that they need to actually go private for this to be. Um, I think acquisitions on the table, but yeah, I don't like. I think people are really worried about this multi-processor situation where, like, this is what Chamath has recently spoke about, where he said, you know, companies are going to have a pick of the litter of every payment provider, and then they're just going to continuously choose the lowest cost provider every time. And I don't necessarily believe that because I think that at a certain point there will be payment providers that can't or that can offer a better product than others. And that can be through things like authentication rates being so much higher. And because PayPal knows the customer on the other end, because they hold both sides of the payment space, that I believe that their authentication rates will be higher than others. And buy now, pay later is a sweet product. People like it. Okay. It's harder to for as a product to roll out right now because of super high interest rates. So access to capital is slowing down. So I don't think it's an exploding market right now, but there's a reason why a firm went from 0 to 100 real quick. And PayPal has a real shot at that entire market. I don't think they're going to take the entire thing. That's not what I'm stating. I don't want that. But like um I don't know if there's any names, maybe few, but I can't name them that have a better buy now pay later product than PayPal. Because they don't rely on buy now pay later. They rely on their existing business, yet they can grow in this very fast, high margin business. And they offer better solution than Affirm, than Klarna, than all of these. They need to monetize Venmo better and also increase services provided to their small to medium-sized businesses, loans, etc., whatever needed. A lot of payment providers looking into banking as a service for small to mid-sized businesses, business customers. Yeah, who better than Alex Chris to do that? I mean, honestly, like who has been sitting with the small to mid-sized businesses for the last 19 years and going, okay, what are you struggling with? What is the real pain points? How can we solve problems for you? And I bet you there's a lot of overlap talking with those people and figuring out that marketing solutions and tax problems and all of these things that he's also talking about. While he's figuring out those problems, he's also getting hit with the, we're having this payment solution and we can't offer the newest, payment option like Venmo or Cash App, which one of the, the very, very newer kids are actually wanting, where people don't think so, but there's about 160 million people in the States that want that payment option. And so, I don't know. It's just, I think he's the right man for the job. Venmo needs improving. Growth is slowed for Venmo. But I think that we might be at like a new bank sort of point right now where they've captured such a high percentage of the market. Nubank being even more exceptional at that, right? 50% of Brazil. But now that you have that market for maybe a checking account or a credit card or something like this, now it's time where they're putting out secured loans like crazy, personal loans, expanding into all these other things that make average revenue per user skyrocket. And it is actually happening at Nubank, a different stock that I hold. But who's to say that that can't happen with Venmo? All while I don't even believe that the investment is that risky. Like I said, all of this, right? This is what you get to wait for over a 6-year period. 65% cheaper. Well, like, I've never seen an investment like this. Have you ever seen any of these numbers? Not that the company stayed flat, that it's 65.6% cheaper on a price to earnings basis. Okay, any way that you want to look at the multiples, this is a cheaper stock. Well, also, you know, bringing up all their margins, all their returns. Not all. Clearly not all, and clearly not all. But I don't think that this is the one metric that people can look at to say, hey, all of this is erased. I don't believe that. It's funny how most people don't know PayPal owns Venmo and they use it every day. Well, I recently had a conversation, and I'm not going to say his username, but they're going to know who they are. And they said, I was talking about Adyen and how big of a player they are. And the person said, Tanner, what are you talking about? Like, you're in Canada, you don't know what's going on. They were saying, I'm in Europe. I use Apple Pay, PayPal, Visa, MasterCard. I've never used Adyen. And I'm like, you wouldn't even know you're using Adyen even if you were using it. I guarantee you used Adyen, okay? That's the one side of the payment chain, okay, is the wallet. Once you're actually tapping it and you're sending it to the merchant, you don't know who is actually providing that payment, okay? So no one has like a Stripe branded payment card or whatever. And I mean, they do actually exist, but no one has that. It's on the other side. It's the checkout side that you don't really control. That's between the merchant and Stripe, who wants to choose, their provider. And here's the thing: there's a reason why companies choose a company like Stripe that might even have higher margins than other payment providers, is because they have a lot of tools for things like small to mid-sized businesses. And the data that you need to service a different client like large enterprise versus small to mid-sized businesses is very different. Okay. And even the small intricacies of those differences, I don't understand. Okay. But whenever an Adyen former president tells you that Stripe is a way better provider to small to mid-sized businesses, I got to believe them. And whenever you see PayPal being in the position that they are, having the strongest, most trusted brand name in all of payments, okay, maybe in all of financial institutions, I don't know who would be higher. I remember trusted brands or trusted large enterprises or whatever. I think it was like Google was number one, which really surprised me, and then PayPal was number two. And let alone for payments might even be more on the side of PayPal, obviously, right? And then so take that trust, and then whenever you're actually asking for someone like an Etsy or a small shop or any small to mid-sized business where you can't actually hold the trust of a checkout on your payment alone. Because one of the things that a consumer really, really wants is disputes. That's a really important thing. Okay, so the idea of, hey, I'm going to trust this small to mid-sized business. I'm going to buy your new product because I saw an advertisement online. I've never really heard of you, and I'm taking that leap, right? It's the amazing part about Amazon is knowing that if anything goes wrong, you're going to get your money back, right? But so to trust the small to mid-sized business, if they just say, hey, put your card information, your expiry, and good luck, and you don't know who's providing it, it's like kind of sketchy. But then whenever you see like powered by Stripe, you're like, okay, well, worst comes to worst, I'm getting my freaking money back. If you see it's powered by PayPal, you're getting your money back if anything goes wrong. To the fault of PayPal alone, I've heard this, that like if anything goes wrong, okay, Shopify does this as well, that like the consumer comes first, always. And the consumer wants that. And so that's what they're going to get. And so Now, so the whole reason why I'm talking about this is because PayPal is entering that space, a space that they really haven't been in before, is the small to mid-sized payment processing. Now, they've been trying to do this for a long time. It was called PayPal Pro, and it sucked. It absolutely sucked. The thing that they're now getting into is PayPal Complete Payments, which is taking the whole Braintree tech stack, which is very freaking good, and they're offering it to small to mid-sized businesses, and they're slowly rolling it out to platforms first. The Wix, the WooCommerce, the Shopifys, these sorts of places. Okay, they're going to take that and then offer it to small to mid-sized businesses, maybe potentially even sell it off to small to mid-sized businesses themselves for them to put it into their code. That's what Stripe has also been very good at. Whenever I was creating a little thing for this channel, which I kind of put on pause and never went back, but regardless, whenever I was making that charts tool, okay, whenever looking for a payment provider, there was no other name other than Stripe in that area. Like, that's just the truth. If PayPal can actually get into that space and offer that sort of payment space, like one thing that would be really nice for me, if I was a small to mid-sized business, would also be not only offering people to pay me through PayPal, but then also getting paid to PayPal. You know what I mean? Anytime I ever work with any companies or ever want to get paid out at all, I ask them, do you guys go to PayPal? And in fact, they always ask me. They go, hey, like we'll pay you in PayPal, because then it's just on both sides of the transaction. It's simple and everyone has it. You know what I mean? Especially if it's cross-border. I'm a Canadian. Half the people that I have to deal with isn't in the States. At Future Investing, Stripe and Plaid are superior fintechs over PayPal. PayPal is the old regime, and Stripe and Plaid are the new kids on the block with better tech and moats. Absolutely. Stripe would say that to you as well. The one thing that I really disagree with yourself and the people that talk about Braintree versus Stripe is the idea that they go, oh, the consumer doesn't know what they want. They should come with us, but yet Braintree is taking all the clients because they're preferring payments over our more experienced and better technology. It's like, no, the customer wants what the customer wants. If the customer wants Braintree, then that is the product that needed to be offered that was not offered. So it's why sayings like the customer is always right was created, is because if they're going to make a purchase, that's who won that deal. So if Stripe is losing customers to PayPal, which they are, okay, there's no question about it that PayPal is the fastest growing out of those three. Okay, they haven't been historically, and the biggest question is people also think that they have the lowest margins out of those three, which might also be true as well. But Braintree is making a freaking run right now. And it might be because they're a loss leader in the business. They might be taking it at such a loss to do payments so then they can offer their wallet. But the real winner is the winner that's taking on new clients. Doesn't PayPal have high authorization rates? Yeah, some of the highest. But it's the things like banking as a service tools and these sorts of things, like the multiple different products that Stripe and Adyen are offering, and they offer more of the payment chain than Braintree actually offers, which is great. But if the customer doesn't need it and they'd rather work with PayPal, even if it's just for the brand name, then that's who wins. Sadly enough. I thought Canada was the 51st state. I wish it was. If Canada was the 51st state, I feel like I wouldn't get kicked out after 6 months, but you do. Oh. No, after all the changes that they're making in Canada, like I heard with even podcasts and stuff, I don't think it's podcasts like mine. I think you have to make quite the sizable amount of income, like 10 million plus a year or something. That they want you to register like a real news station. And they just, I don't know. Canada's kind of scaring me right now. I'd much rather be an American. America. Head down to Florida and live out my days. But I guess buying the house is not a good way to live out that dream. We'd welcome you to the States anytime. Well, I appreciate that, Crossroads, but unless you're border patrol or immigration or anything, I don't think that goes the same for everyone else that wants to let me in. Florida, no state income taxes. Yeah, I have a lot of family in Florida. That's really why. It's not that I think I want to live in a state that has like the most freaking floods and natural disaster, it seems. I feel like they just get hit with like a friggin' city-ending hurricane every year, but taxes are good. What's so bad about Canada? Well, look at Ontario taxes. And that's mainly it, most of it. Nevada, no taxes as well. Yeah, it's just so far away from family. If I like, the reason why I like Florida is just simply because I would know people instantly. Nevada, it's like, I mean, yeah, I could hang out with Jeremy and Graham Stephan, but I'm sure they don't want to hang out with me. PayPal USD going to be huge? Question mark. Daniel Stocks. I think that PayPal USD as like which one the consumer is going to pick? No. I think that right now between the crypto universe sort of people, that Circle seems to have the market for stablecoins. And there's no real reason to pick PayPal USD over USDC that I've ever seen. Maybe there is, I don't know. But I think that it'll be more forced usage of PayPal stablecoin. Like, hey, you know what? If you use PayPal to send this money over to your friend, 1% cash back. Use PayPal USD to send money over to your friend, and it is the equivalent of US dollars, and you can train the user to know that, and we'll give you 2% cash back. Hey, you know what I mean? Like, I don't know how it'll exactly be presented, but the idea that there will be higher rewards, faster settlement times. Imagine, Cash App's entire business. Some of these businesses, their entire practice is, we can send money back to your bank account 3 to 5 days, whatever, or we can, withdraw that instantly, whatever, or we can take 1.75% and pay it to you instantly. And then people go, okay, well, I'm willing to pay it, right? If you are to do that with, PayPal USD of going, hey, you can choose to do a regular settlement at 3 days, or you can use PayPal USD, whatever. And it'll be instant. It'll settle instantly. Someone gives it a try one time, it goes perfectly fine. You're fine to do it twice. See, one of the things I always thought was so funny is that dealing with more elderly clients as a financial advisor here in Canada, whenever during COVID and everything, they were very, very hesitant. They just said, hey, you know what? Mail me the paperwork. And I was like, well, I'm not paying postage every single time. Why don't we try DocuSign? And they're like, no, I don't want to do that. I'm like, let's just try it. And if you run into any problems, you call me and I'll walk you through on the phone. Click here, click here, click here. And just stuff like this, right? And then the second time, so we do the DocuSign, it goes fine. I send the paperwork up, whatever. The second time it actually happens, they go, oh, okay, just send me the DocuSign. Because it wasn't that scary. You know what? That's the whole thing, is it wasn't that bad. In fact, it was actually probably pretty nice. And then, you know what? It just takes people you got to walk some people through the experience. And then whenever, they get used to it, then they're happy to do it again. And then potentially they might even be happy doing Adobe Sign or some other sort of provider that, aside from DocuSign, it might not even need to be the same name, because the entire experience is quite equivalent across the board. All I need is one more PayPal run to $63 from now until the next fall. That's all I need. PB, you from your wording, from now until next fall. Oh, wait, are you meaning season? You didn't capitalize it. Do you mean like fall of the season? Or are you meaning fall like the next, because you just have no belief in the stock? Because also, I don't necessarily think that Q3 is going to be the savior of PayPal. I think that some people are saying Q4, Q1. I think hopefully Dan Schulman said margins are going to improve by Q4. I'm going to hope for that quarter. But yeah. Tuffy question. If you could only invest in PayPal, SoFi, or Nubank, which would you do? SoFi. So I could hang my hat knowing that SoFi would be easier for me to follow. One region, the political issues would be very, very little versus something like Nubank. I believe that owning the customer, like SoFi would, is a massive benefit to SoFi versus someone like PayPal, for example, where you kind of have to just be like you get to pick which B2B client you work with and have to worry about all that innovation. You just have to worry about satisfying the customer, excuse me, and all the benefits of all that innovation, cheaper, everything all goes towards, yourself. I'm a big believer that SoFi, being the bank, owning the customer, being just in the States, and having such a low market cap leads them to the best performance in the long term. Crypto noob, but what's the benefits from having PayPal crypto? Are you meaning the stablecoin? Because we kind of spoke about that. It would be cheaper to actually, use them versus traditional means, and also be faster settlement times. That's why they want to use it. There's also things like really, really small settlement costs. Like, this is another thing. If you ever go to some really big companies like a Walmart, for example, and you get a 99-cent purchase, and you just ring that out and you use a card to do a 99-cent purchase, potentially even a lot of small businesses will block you from doing that, because the actual costs on a small transaction through Visa, MasterCard, Stripe, whatever, will be so freaking high, because everything still has to get done. And they do actually have smaller rates that they will take for purchases under $5, but it's still like, it would be like 30+% of the overall transaction if it was like a 99-cent purchase. Nice, Dollar General. Yeah, exactly. So if you're trying to do a single transaction, one-time payment, the take rate on those cards is actually quite freaking high. Okay. If all those things were being settled in stable coins, the payments would be like nearly the same. It would be disgustingly small. And so one of the things that is quite exciting as well for stablecoins is the small payments section that really hasn't been dominated by card. It's been dominated by cash. And that would change. Crossroads said he did a 34-cent transaction at HEB today. And honestly, HEB's not complaining, but they might have taken a loss on that transaction. Like, they might have just given you that for free. Because there's a flat rate. See, it's not all about you hear a lot of cards will say, oh, we take 30 cents plus 2.9%. But and it might be even smaller for small transaction, might be 20 cents. Like even Braintree, I think it's 49 cents plus 2.4, I think is what they do right now. Which really benefits, like a car seller or something, because the difference between 30 cents and 49 cents is not big on a car, but the difference between 2.9% and 2.4% is really big on a car. So small stuff like that. But whenever you're talking about a 34-cent transaction that you put on your card, they're just willing to take the loss on that because they just want you to be a returning customer. They don't want to have for you to have a bad experience over a 39-cent dispute, you know? So walk out with it, whatever. Frank, man, you got a lot of very strong views. We're in a high interest rate environment for a while here. SoFi has $3 billion in cash, $6.6 billion in debt, ticking time bomb. Do you think having a 2-to-1 debt to cash ratio is healthy? Not in a high interest rate environment, no. But I do think that there's a whole bunch of things that SoFi is doing during that time that's growing past just a cash to debt ratio. If you're growing your customer base at such a healthy amount, revenue's growing by 40%, and that can accelerate. One thing that I think is I've talked about this a couple of times, but I want to just reiterate that a lot of companies, especially as they get more and more mature, that just revenue, whenever you're making 50% year over year, that slowly starts to come down, and then people think that you'll never really hit another S curve. If you can, then you're one of those companies that should be right at the top if you're hitting multiple S curves. But I do think that SoFi is one of those companies where growth will accelerate back into the future. As they said, right now we're really trying to understand how to market to our customers. We're bringing on about 4, maybe 500,000 new members per quarter. Last quarter, 584,000. They want to get that to 800,000, a million customers per quarter, and they're going to get them on what's it called? What am I trying to say here? Trying to get them on, checking accounts, more transactions through debit, through credit, investing, all these things that don't really have to do with credit. It'll be a harder time right now, but I think that is reiterated through the low stock price. That's why I was able to buy in $7 ranges. So, yeah. Does SoFi have plans to go international? They are international. SoFi Hong Kong is a thing right now. They have, it's the flywheel throwable. They have plans to go into Singapore. Unofficial plans, by the way. They have all the regulations and licenses that they need and the domains and everything set up in Singapore and United Arab Emirates, and haven't announced it. So we believe, as a community of these deep dive nerds that want to find this stuff, like Bender 9000 and Vadim and, data-driven investing, have found that, they are going international. Those expansions should be coming through. However, just halted right now because it might be an expensive way to grow. And Anthony Noto has also talked about getting into Latin America. So international is definitely on the table. I like SoFi, not now when weights drop, but I agree growth will most likely accelerate along with profitability. And I 100% agree that this is not the perfect environment for SoFi, but I have no way to time that. The Fed can change their mind on a dime, and if that's the case, I want to be holding SoFi whenever that happens, not trying to find an entry point after that actually happens. Traders are way too fast for me. I've never really purchased on you see news before everyone else, and you can buy within the first 5 seconds of that news coming out. I don't even know, is that all algorithmic trading? Is that all just like Bloomberg terminal freaking what do you call it? Institutional investors that are able to have that speed to invest? Because I don't. You know what I mean? My brokerages of TD and Wealthsimple are just not going to allow me to do that. So that's not going to happen. So I'd rather just be holding it, especially too, for me, I've got so many positions that I find that I've never really had the speed to sort of handle them all. I kind of just like having very long-term positions. And just if anything drastic changes for SoFi, then I'll believe it. But I still don't think that these rate increases are going to stop it from triple beating. And if you guys don't believe me on that, you need to watch that Noto interview because that case that he put up, or sorry, the me showing off his overall like career history, I just totally believe that that's the case for like, oh, SoFi will have some hard times, but will always come out stronger because that guy's behind the wheel. And if you don't believe me, watch that documentary because this dude is one of the strongest, leaders I think I've ever seen in management. He's been a winner 100% throughout his history, and it's not even small wins. I mean, massive wins. Like being in a team of winners and being the winneriest of winners, and that's who leads very fast-growing public companies. And I think he's next. Okay, guys, I do a 30-minute show every day, even sometimes shorter than that. And today we did an hour, a little more than an hour. I love you guys. Appreciate your time. Thanks to Koyfin for that, technology and helping to make this video. I'm going to be doing more of those because just the tool is unbelievable. And if you want to support the channel or looking at getting some new charting stuff, there is an affiliate link down in the description down below. If you're not taking your investments seriously, don't buy it because it's overkill. Okay. If you want a tool that can do a little bit of everything, that's your tool. If you got a big enough bank to bankroll it and you don't think it's much. Love you guys. But bye for now.